Hello and welcome to today's episode of Xeneta Newsroom, where you get your weekly dose of container shipping market insights. I am Peter San, Chief Analyst at Xeneta, the world's largest ocean and air freight benchmarking and market analytics platform. Many of you who are joining today might already know that at Xeneta, we strive to provide the most up-to-date information on ocean and air freight rate developments. And that is what we are going to talk about here today at Xeneta Newsroom. In case you are joining a Xeneta event for the first time, please follow our LinkedIn page to get notifications about upcoming events. In this weekly LinkedIn Live series, I will be sharing to the point shipping market insights to help you stay up to date with the most significant market movements and trends. In that way, you can anticipate any upcoming changes and disruptions to your freight procurement needs and react faster to ever-changing market conditions. Do let us know in the comments where you're joining from, and if you have any questions along the way, please share them as well below. First up, let's get going with a focus on what caught my eye over the past 4 days. The first news that caught my eye in the global media was an announcement by our partners at Sea Intelligence, where they stated that 35% of trade capacity on the Trans-Pacific trade lane to the US West Coast is now non-alliance. And just to be absolutely sure, that means, of course, that many, say, new Chinese intra-Asian players, but also, say, as they term it, quote unquote, bewildered retailers and manufacturers have tried to do it themselves over the past couple of months and quarters. Have they been successful? Well, go ahead and ask the terminals and ports that have many times over have complained about, say, lack of professionalism for quite a few of these non-alliance players. Enough on that. Read it yourself. It's good stuff. It's also good stuff. The second story I have chosen today. Container shipping has greatest quarter ever in terms of profits, with much more to come. My question here is, are they spending those profits well? Are they lifting their services to benefit shippers around the globe? If yes is the reply to that, thank you. We are, as a shipper, ready to support you as a carrier if you just deliver on your promise. Lifting global schedule reliability, making sure that boxes are readily available. So make sure to spend those money well. We all know that 50 billion approximately have been spent on 4.2 million TEUs of shipping capacity that would enter fleets in 2023 and 2024. Let's see how that will improve the services when we get there. And thirdly, the main story of this week. Surely many of you recall that back in September 2021, carriers such as Hapag-Lloyd, CMA, CGM, and some others decided to go public and freezing spot rates until February 2022. Well, that's where we are now. So what happens next? Well, some of you may also have seen more spot market offerings on digital platforms. Joining Maersk Spot that launched in May 2019, we now also have Spot On from CMA, CGM. We have Quick Notes from Hapag-Lloyd and more. Who will benefit the most from this? I think in many ways, the digital trends are here to stay. If these are the super best ways to procure freight for small and medium-sized shippers and freight forwarders, so be it. If it works, check. But if it is meant to only squeeze out smaller shippers from the contract market, basically giving them perhaps a little bit of an unfair disadvantage in terms of only being at the spot market mercy, at least That's the case right now because, well, I'm an old man now, so I still do recall many times over in the past, spot rates have been below that of contract rates. So I guess, as many of these news, the jury is absolutely still out on this one. All right, guys, let's jump right into the Xeneta platform because one of the offerings, of course, of Xeneta is to give you the opportunity to monitor and observe the market, making sure that you can analyze the development, plan ahead for your tendering processes, and of course, well, in order to do so, prepare well for what comes next. Please allow me to share the first lane of today, a one of the trade lanes that you will find under the large umbrella that we often term the Far East Main to North Europe. This case is Shanghai to Felixstowe. As you can see here on the top right, I have singled out the spot market rates for Shanghai to Felixstowe for a container right now sitting just shy of $15,000 per box. Obviously, what goes into a spot market rate like this is not only, say, global tendencies like, okay, are the global supply chains strained, but certainly also the local, more, say, congestion related issues. In this case, Felixstowe have certainly battled more congestion than some of the compatriot ports in the UK, like London Gateway or Southampton. So if you were a shrewd shipper, or at least someone that followed the market information that we provide on our platform very closely, you can from time to time make a comparison to the three main import hubs into the UK and decide which one is the best one to make use at any given time. Naturally, you should also check out the long-term freight rates here, and you will also note here that for the Shanghai to Felixstowe, this one sits a bit above what you can expect from, say, the standard main haul from Far East into North Europe, which right now is fixed around $9,000 per box. This is again, of course, due to the struggles that we have seen in the past couple of months and quarters. And this is a sign of shippers also being fed up with cargoes rolled over and, say, basically containers holding valuable cargoes that should be there in the right point in time is not arriving. Hopefully, the contract market will offer an improved service on that regard. That is, of course, what the shippers are expecting carriers to deliver when going forward. The second chart that I have decided to show you today from the Xeneta platform is the Antwerp to Rotterdam. And just up front here, you can see approximately $7,000 per box. If we just scroll down a little bit, you will see, if we focus only on the short-term contracts here, you can see that, well, approximately 1 year ago, that was 200% lower at $2,262 on average on the 3rd February 2021. So today at approximately $7,000 per box, that is plus $200 per box. Sorry, 200% up per box on the spot market. Be aware also that you can see on the Xeneta platform market high, mid-low, and low. In this case, it seems to be quite equally spread over the positions here. Of course, giving you an idea when you benchmark how well you procure your freight. Am I on market average? Am I actually performing better, perhaps because my fixes are in the mid-low? Or, well, basically you can do so for all the port pairs that we have, in total 160,000. All right, while you're at it, go to Xeneta.com because the monthly XSI report is just released. XSI being short for Xeneta Shipping Index, and this report provides specific insight into the long-term contract ocean freight market. The logistics chain remains stressed. Go to our website to get your copy, and while you're there, you will also find Xeneta's weekly rate update This week, our focus has been on the transatlantic head haul, and very much so on the narrowing gap between long-term freight rates and the spot market, with shippers seeking a more resilient and predictable service. Those are signs of much higher long-term contract rates than just a few months ago. As I'm about to wrap up here now, the fourth segment of Xeneta Newsroom, titled If I Were to Pick a Song That Sets the Tune for This Week, this would be it. For this week, I have singled out the 2020 hit, The Business by the Dutch DJ Tiesto, because February is all about the business and the different approaches to it, as we have seen carriers do very different things this year, as opposed to the herd mentality of a normal pre-COVID season that surrounds February and Chinese Lunar New Year in particular. As always, you can find the YouTube link to this song in the comments. That's all for today. Next week, I will be back with another live episode. But in the meantime, remember to check out Xeneta.com for our latest XSI report. The link is provided for you also in the comments. Thanks again for joining us for this episode of Xeneta Newsroom. And in case you're watching this episode as a recorded version and had any questions, you can add them in the comments and we will get back to you. Remember, if you want to know how to procure freight like a pro, Xeneta.com is where you want to go. This is Xeneta Newsroom. I am Peter Sand signing off. Stay safe, and I'm looking forward to meeting you again next week. Take care.